Okay, good afternoon, everybody. This is Dennis Wober. Welcome to the Making Money Trading Stocks, Options, and ETFs for basically the last Friday in October. The year of 2018 is just about in the books, and we continue to push into the end of the year. Let's just basically want to remind everybody that all the materials we do present are for training purposes, and all our traders should always pay per trade any new method prior to the risk of their own personal capital. Past performance is no indication or promise for future performance. Quick picture. As you're all aware, Brandon is busily working behind the scenes on a lot of active trend trading and market action points material. And so he will be getting more engaged. Matter of fact, he wrote out an alert for me, or a update alert for the MAPS and EWA folks that we'll be sending out prior to the end of close of business today. A little bit about me, a little bit about Brandon. He has been working with me pretty consistently since he graduated from college back in 2005, and okay, always remember, discipline is the key that turns knowledge into wisdom. We spend a lot of time with our trading trying to get filled with a lot of, as I say, knowledge. We pay a pretty price to get paid up with that knowledge aspect. But you have to remember that with applying the knowledge, which takes discipline, is what turns it into wisdom, and so that we can basically do well and do better going forward. Let's see, because annotation is disabled, your purchaser need to upgrade to the. Yeah, if you guys get a chance, please do an upgrade to the latest version of Zoom, so that in the event we do a share of the screen. I'll be able to call on you to share your screen. So our objective of today's session, we want to keep it short, sweet, probably 10 to 15 minutes. I know I've been running a little bit over the last few weeks, but I really want to try to be respectful of your time. Keep it down to no more than 15 to 20 minutes. We'll do a real quick market review. And my big question going into today is, when's the next market bounce? We are not there yet, but we're getting close. And so then take a look at some stocks, ETFs, bonus trades, if there are any shaping up. I'm not in a real hurry to get long right here, folks. And the reason why is because the market is just pushing further down. And while we're seeing some signs of being ready to, do a reversal, and some people may do some nibbling, it just all depends on your risk level, and how basically, whether you're an aggressive and or a conservative type trader. So aggressive traders may be trying to nibble a little bit now. Conservatives are going to want some proof that things, yes, are in fact turning around. Here's where we're sitting as of basically about 9 o'clock this morning. As you can see, the Dow eked back into positive territory for the year, as with the S&P, as with the NASDAQ, as with the NASDAQ composite. The Russell is down a little bit for the year, and you've got both the Dow and the Russell down from the highs from last year. We're clicking up. I always shoot for, my objective is with the active trend trading system and the strategy we trade is to do about 40%. We've been on track. We did over 40% last year, and we're sitting at 29%, pushing that limit right now. Here's where we're basically, strategy 3 is has done very well for us over the years and continues to do so. Strategy 1, strategy 3, not quite as robust as I want them to be, but I am continuously working on helping them become more robust. So for premium members, of course, We do put out this list, which is the go, no-go table, which is basically I identify. I find it simple to keep just follow just a handful of stocks. So we've got basically the Magnificent 7 ETFs, which is actually 8 of them, along with 2 to 4 stocks that I want to follow on a regular basis. This week, of course, we tend to follow Tesla, Baba, because they're also in our strategy 3. And then we were looking at Wing and Venom. But again, the market continues to sell off. We've gotten some very volatile moves over the last little bit. As you can see, Tesla, and I want to take a look from a perspective at the some of the stocks that did report earnings, which of course was Amazon, Tesla, and what's Amazon's buddy? Google, or Alphabet as it likes to be known today. Here's where has basically finished up. Had a really nice trade in Tesla over earnings. We sold a Strangle and collected $1,100 on that. So our cash flow for strategy 3 so far going into October is about $5,900, which is, I'm pleased with that. Want to remind everybody that I'll come back to NASDAQ. Let's take a look at some individual charts, because that's what you want. That's what we basically want to be looking at. So S&P, let's take a look at S&P. Weekly chart on the left as our anchor chart, daily chart on the right. So if we take, and here's something you can do over the weekend, folks, is go ahead and highlight today's low or this week's low, because it is a significant low, but what can we pick up from this low? Well, there we go. That's approximately. And what I like to do in this is whenever I am, especially if I'm working off of like a daily chart, is I'll take and put in that low, because what kind of low do we have going on here? Well, basically a spinning top type doji. It's not quite a hammer, but it does clearly, because of the long tail on the bottom, at least at this point in the day. Now, of course, we could get a big sell-off before the end of the day and go rushing down here and close back below the 2650 level, which I think that if that happened, that would more or less kind of void what had taken place. If we closed back below the low from 2 days ago, then we had this inside day here. That would void that inside day, telling us that, yeah, we probably have more downside to go to. But I'll highlight where my low is with a horizontal line, and then I'll just extend that to the left. And then once I've done that, what I want to do is I want to go over here and say, okay, by extending, oops, just blow this up a little bit. Here's the line I extended over to the left. Well, what can we take away from that? Well, basically we can take away that, yes, that defines or is in the proximity of a zone where price actions reversed. Once, twice, price actions broke out over here, down here at the about the 2060 level, or the 2600 level, and so we know we're close to a zone. So we know we've got a strong level of support there. But again, positive divergence on the daily. No positive divergence on the weekly. As a matter of fact, it's still pressing down towards low. And so that's one of the reasons why I'm very cautious. We have, it has put in a very nice thrust down, and I can say the same thing about every one of the other index ETFs. We had a thrust down, a reaction up. Now, normally if we maintain symmetry, the next thrust down will be approximately equal to this thrust down in percentage-wise, and also maybe in points-wise. And so as we see, that would take us down to approximately, what we're going to do is I'm going to go up here and I'm going to grab this That's not what I want. Never mind. Get rid of that. Grab that, and there we go. So I'm going to grab this right here. I'm going to take it down to the, grab that. I might grab this. Let's see. There we go. I think I captured it that time. Stretch it down to there. Now that's your first thrust down. I can now take this, reactivate it, move it over to where the next peak was, which if we take that, and just go to right approximately there. Again, when you're doing this at home on your own, you're probably not going to have the bandwidth issue. And isn't it kind of interesting? If we maintain symmetry, on this move down, it takes us right down to the 2600 level. 2600 level. So that's something to, in your journal, make a note. 2600 level on S&P could be where we might get a bounce. Now, timing-wise, when might the bounce take place? Some of the folks I've been watching and talking to, and also when you stretch out a time Fibonacci, it puts us to where we should potentially hit a low sometime next week. Now, the big question, of course, is will it be a 1, tradable low, and 2, will it result in at least a thrust up equal to what we've seen before? If symmetry is maintained, we should expect at least a thrust back up into the 8-day moving average, or even the 20-day moving average, excuse me. On best case, perhaps we would get back up into the 200-day moving average. But keep in mind, we want to watch this low right there to see if that, basically that little low right there, if that holds as a level of resistance, then we would push up to that and then a reversal back down out of that. And again, so I want to cover that fairly heavily on the S&P. And then take a look at the Qs. Because the Qs are showing a similar pattern. Excuse me. As you can see, okay, from a daily standpoint, positive on the daily chart with the a positive divergence on the TSI. However, TSI is rolling back over. Now, what it may do is just drop below the overbought or oversold condition at negative 42, put in a lower low or a lower low, but not a lower TSI. That would reflect, that the bounce is getting closer. We've got this very specific level of support here. You can see on a weekly chart. Anticipating a similar type move moving down into that off the Qs. Again, TSI heading down weekly chart with no real indication that it's ready to reverse or turn around yet. And so if you, and the Qs tend to be, Qs and S&P were the strongest, and so IWM turned out continues to be the weakest link. But I kind of like that it is the weakest link, and the reason why is it tends to capture a really, larger move in the Christmas time frame, and so that's what we're waiting on here. As you see here, it looked as if we were going to get a hammer coming into the end of the day, but we did define it is already, IWM, the Russell has already reached down into this lower level of support where it did its bouncing from back in February and March and April of this year. So it's already testing down in there. Again, weekly wise, no reverse, no signal of a reversal. TSI is getting very oversold, and it is basically past the lows that it's hit previously when it did do a reversal back up. And so the way the way I'd be looking at trading is until we get some kind of a foundation bottom hammered out here, look for a pullback up into the moving averages, and that to fail and drop down, basically as we're seeing here. So as it stands right now, 145, strong level of support. Yesterday's candlestick, an inside day on this, so that's a very positive. Today we're getting what appears to be I'm going to go ahead and call this, if things don't change, where it drops down back down below these lows here, then we'll get another harami. So we'd have a inside day, which is a bullish harami, and then followed by another little itty bitty bullish harami. So, and for premium members and for also the MAPS members, I'll be talking about sending out an alert today or over the weekend on how I'm going to be trading this, if this in fact is a time to get in. So let's see here. Let's go over here to Amazon. Let's maybe go over to Amazon. There we go. Okay, as we can see with Amazon, it also has pushed down to a new low. Here was the day of earnings, a gap down after earnings, and we're hitting there right at where it broke out before. Just, whenever you're looking at the chart over here on the weekly chart, just go to your left. Make sure you have enough time and data, at least 2 years worth of data. And when the price is starting to sell off, look to your left to find out, okay, where did it break out from? That's normally going to be an area where you can anticipate support. Doesn't guarantee it's going to 100% always be support, but you'll often to get a tradable bounce from that area. So we're getting that right there at about 1,600. You can see big sell-off today. It kind of looks like it sold off the day before earnings, or 2 days before earnings, then a day before earnings, and then had a big buy up on earnings, anticipating something really great happening, and it didn't happen, and so it's selling off. Does anybody follow Amazon that? Does anybody follow Amazon that much? You know why they got whacked after with their earnings? And so, yeah, Eric, I do use a log scale, but if your trajectory, and that's what makes it look, symmetric. I think it's a percentage move. Excuse me. So go over to our buddy Google. Maybe we should just start calling Google Big Brother, huh? So based on similar type pattern, look how similar this pattern is with the, no, that's because it's, there we go. That's because it was the same as Amazon. So we had already closed below the 200-day moving average, and now it's proceeding just to continue further falling down from that. It jumped up into, and this is kind of pretty classic too. I'll highlight this for everybody. Is see how the price action jumped up into the past highs. Oftentimes when you're a downtrend like that, so if you want to trade it to the downside, that's a great place to look at taking a short position, or highlight where your 8-day is. And when you hit that 8-day on a intraday chart, if you've got an overbought condition intraday, then that's a pretty good indication that, hey, we're going to slip away from here. Now, the one surprising thing with Tesla, with earnings, was our buddy Tesla. Tesla just ripped it to the upside after earnings, but it stayed contained, stayed very contained, as we can see here. And TSI almost over to the extreme overbought condition and hasn't rolled over yet. On a daily, on a weekly chart, excuse me, we have a TSI tick up down here from these lows down here. So this is a huge level of buying that's going on. Tesla had a good earnings report. Looks like they're continuing to becoming profitable, and anticipated to stay profitable for the next few quarters. Look for Tesla to pull back. At this point, I would look at Tesla anywhere from 340. If it gets close to 340, look to short it. If it gets down here towards the 360 level, look to go long. If it stops somewhere in the middle, I'll look to the intraday chart for a clue on how to trade it from there. So that's what we're doing with Tesla. Okay, let's take a real quick look at our buddy gold. And what I'm looking for in gold is gold caught a bid earlier today. The gold futures took off like a scalded dog, if you will. And but what happened was it moved up very quickly, very rapidly. It hit a previous level. Look at that previous. As I said earlier, take your weekly chart, look to your left. Weekly chart, look to your left, and look what it ran into. Right here. A level of support, where support came down, bounced here, tried to bounce here, stopped, stopped this downward fall, dropped down below it, and now as it approaches it from the upside, the polarity on the polarity on your support turned into resistance. It switches polarity, and what was support becomes resistance. And sure enough, gold hung up right there. And so is it going to, it may have to, what we'll see is kind of this stuff going on here. If that, see how that resistance works, pull back into moving averages, bounce up again, try to hit it again, bounce up, try to hit it again. And eventually it's either going to get tired up here and then go into a more of a declining mode, back down into here, and then you just wait for it to get back to the 112 level and see if we can, reprime the pot, reprime the pump, and start over again. If we break out, then where's it potentially going? Well, I like up here, just about 122, 2150. That's if we break out from the 17. So that's what we got going with gold. Okay, my friends, that basically how we doing time-wise. I ran a little bit over, but I thought it was very important. I wanted to share the information with you on what we're seeing with the indexes. And again, at this point, I'm not going to jump in front of trying to catch falling knives. However, things do look positive, but they haven't made a 100% reversal yet. Hi, Barb. I watch Amazon, but while the company is posting record earnings, their stock is still falling. That doesn't make sense to me. Well, that's where there's a lot of other things that are going on with Amazon. And that's a great point to make. If you're looking for some of the internal stuff that's going around, you know, you can look at IBD, Investor Business Daily, and they give a really good breakdown on their site of what's going on with the fundamentals. And I'll bet you something with Amazon is weak. And it may be just, you know, it may be just a natural systematic sell-off to get it back down to a better buying point. IBD, let's see, Q3 provided an ink blot test for the stock market. Do investors see a stunning 83% beat in earnings, or do they see a, okay. Oh, so it beat earnings but lost in revenue. Thanks, Eric. Yeah, I would anticipate going forward that investors are going to be looking for reasons to sell, and any kind of perceived hiccup, they'll take it to the downside. So, okay, my friends, thank you very much for joining us today. I want to wish you a really wonderful weekend. I'm going to be busy working in the house with my wife this weekend. So, again, aloha, God bless. Have a great weekend, everybody. Oh, let me go before I get totally involved in that. We'll talk a little bit about seasonality. If you're a BAM member, November 3rd, we're going to be having a what are the 5 pillars of all successful trend trading systems. That'll be a webinar. MAPS is underway. Just anticipate a big announcement on that for non-EWA members, but just on the MAPS in the next couple of weeks. And so keep the egg growing, and we'll see you for the premium members for the final hour in about a half hour. And so I really love this picture. That's me and my granddaughter at Hanama Bay, just enjoying almost a sunrise together. So God bless everybody. Have a great weekend.